What's going on, everybody? What's going on? Back at it again. Back at it again with another episode of the Trade for Yourself podcast. I appreciate everybody for tapping in. I appreciate everybody for tapping in. This is going to be a fun one. This right here, this episode right here is going to be a fun one. It's going to be a fun one. So again, I appreciate everybody for tapping in for another episode. The market was green today. We had a green day in the market. That's okay, but we're in September, one of the worst months historically. So, we saw green today. We understand what's going on today, but let's just make sure that we be careful with everything that's going on. All right. So, without any further ado, let's go ahead and get started. Again, thank you and welcome to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade for yourself. Please please like this, y'all. Please like it. Okay, this is going to help me in the algorithm. This is going to help me get out to multiple people who want to learn how to trade, who want to learn how to invest. Okay, if you get any value from what we talk about, please like it. Okay, please subscribe. Okay, please subscribe. That will also help with the algorithm. Make sure you ping that notification bell so every time I come on here, you will be able to get the notification. You'll come straight to your phone, straight to your iPad, straight to your Apple Watch, I assume. Okay, so just go ahead and do that for me, because this is going to help the channel continue to grow. All right, I appreciate everybody that's listening on the audio. Tap in, subscribe, do what you need to do. Okay, disclaimer: I'm not a financial advisor, nor am I a fiduciary. Okay, I am not an economist, and I don't manage money professionally. So please do your own research before investing into any stock. All right, so this episode is going to be a fun one. This is going to be a fun one because in this episode, we're not worried about what Jerome Powell is saying with the Fed. We're not worried about interest rates. We're not worried about any of that that's going on right now, because we understand that we're in a bear market. We know we're in a bear market. We've heard about it. Every pundit is going to talk to you about it on the television. The reason why I started the Trade for Yourself podcast was because I wanted to teach people how to trade and invest in the stock market for yourself. But I want to break down companies, because this is why I love the market, because we can break down companies, understand businesses, understand what's going to make them grow, so we can understand how we get returns in the market. Because the game of the stock market is a game of R&R. And I'm not talking about rest and relaxation. I'm talking about research and returns. And so if we're going to be an active investor in the stock market, we got to be able to research in order to be able to get our returns. And so this episode is going to be all about Nvidia. Nvidia, ticker symbol NVDA. All right. Nvidia is the largest semiconductor company in the United States by market cap. Over $300 billion in market cap, a leader in the artificial intelligence industry. And so now we're going to break down the company, see what's going on, and see how good this company really is. And, they've taken a beating. They've taken a beating as of late in the market. So we're going to break down Nvidia stock today on this episode. So let's go ahead and get ready to share this screen so we can get into this. All right. So the first thing we're going to look at here is we're going to look at the Nvidia presentation. Okay, so this presentation, we're going to look at Nvidia, look at what's been going on in the past earnings report, some key announcements, and look at the business overall. Okay, who is Nvidia? What is Nvidia, and why is it important? And why is it important, and why is it a good business? So we're looking at Q2 fiscal 23. This is their quarter two fiscal 23. Their fiscal year is different from most companies. They're operating already in the fiscal 23 calendar. Some people may switch over, but their earnings is a little bit differently. So just bear with it and just tap in with it. All right. So highlights. This has been a challenging quarter for the business. Shortfall to expectations driven primarily by weaker gaming revenue. Total revenue is up 3% year over year to 6.7 billion, below the outlook of 8.1 billion. Okay. Data center was still up though. Data center was up 61% year over year to 3.81 billion. That's very good. But the gaming was down. Gaming was down 33% year over year to 2.04 billion. Now, data center revenue was impacted by supply chain disruptions. The revenue from hyperscale customers nearly doubled year on year. Vertical industries grew both sequentially and year on year, and upcoming launches of next generation platforms, H100 data center GPU in production. Now, what does GPU stands for? GPU stands for the graphics processing unit. That is a chip that goes into machines to make them perform at a high level, to give you that speed, to give you what you need for that high performance. Now, gaming revenue in Q2 and outlook for Q3 reflect channel inventory correction. Macroeconomic headwinds across the world drove a sudden slowdown in consumer demand. Gaming partners and ecosystem are responding to the slowdown and correcting channel inventory. Upcoming gaming architecture launch set to kickstart the next high-end upgrade cycle. So the gaming division and the gaming industry as a whole has been going into a correction. And so now what Nvidia is doing is that Nvidia is developing new chips to get ready for that next high-end upgrade cycle. So let's look at the Q2 fiscal 2023 financial summary. Now, on the left, we can look at the revenue over the previous quarters. The revenue over the previous quarters has been continuing to increase. 6.5 billion last year at this time, went to 7.1 billion, then went to 7.6 billion, and then we had almost $8.28 billion, okay, in the previous quarter. The gross margins were very high, very, very high gross margins. We're looking at upwards of 66% in gross margin, the money that they are getting back. But we had a big drop off in this past quarter. Like we said, we had that revenue of 6.7 billion, which was slightly up from last year. Gross margin was down to 43.5%. This 21.3 basis points down, which was not good. Operating income was only 499 million, down 80%, okay, from last year. Net income, 656 million, down 72%. Diluted EPS, 26%, down 72%. And the cash flow from operations was 1.2 billion, down 53%. Now, these are just the GAAP numbers that I'm looking at, okay? You've got the GAAP numbers, and then you've got the non-GAAP. Now, the GAAP stands for your generally accepted accounting principles. That's what GAAP stands for. GAAP stands for generally accepted accounting principles, right? GAAP is what the SEC, the Securities and Exchange Commissions, that's what they realize, that's what they recognize in terms of revenue, right? Non-GAAP is the revenue that the company received, but the SEC doesn't recognize it, right? They don't recognize it. And so when they are reporting to the SEC, they are reporting in terms of GAAP. The non-GAAP is just additional metrics that the company is letting you see, but the SEC is not going to be recognizing this. So is this for gaming or overall? We're looking at the overall metrics for Q2, okay? We're going to look at what the gaming breakdown was down the line in this presentation, but right now, what we're looking at right now is just the overall metrics for gaming. We're going with the overall metrics for the company, okay? Just for the company. We're going to look at gaming in further detail as we go down the presentation. But if we just look at this presentation, okay, if we just look at this presentation and we see the upward growth, but then we see a drop off, okay, maybe this was just a blip on the radar, okay, maybe this was only a blip on the radar, okay, maybe this isn't that big of a deal as we make it seem, okay. We're going to go through this and we're going to make some other situations and some other analyses, all right. So data center. So data center revenue from hyperscale customers nearly doubled year over year. That's very solid. Data center is a very, very strong metric for the business that's going to continue to grow. Sales to North America hyperscale and cloud computing customers increased quarter over quarter, but were more than offset by lower sales to China hyperscale customers. Now, CEO Jensen Huang said on the previous earnings call that they had lower sales in China for their hyperscale customers. But he said that this is not going to last forever, because right now China is going through a recession and they're going through less spending from an enterprise perspective. But he made it known in the call that eventually that spending is going to come back. And once those China hyperscale customers come back online, that's going to add more revenue to the business. Now, quarter over quarter, the data center revenue is continuing to increase quarter over quarter and year over year. Vertical industries grew both quarter over quarter and year on year. The key workloads driving growth include natural language processing, recommender systems, autonomous vehicle fleet data processing and training, and cloud graphics. Okay, there's been strong demand for high-speed Ethernet adapters and design win momentum towards next-gen adapters, including the Connect X6 and the Connect X7. Updates to the NeMo Megatron framework that can speed up the training of large language models by up to 30%. Now, all of this language that we're talking about and all of this jargon, this is related to machine learning, okay? Machine learning is a new artificial intelligence situation that's going to allow for growth, okay? Computers are going to be able to think for themselves. They're going to be able to think for themselves, and Nvidia creates the GPUs that are going to allow them to think for themselves, that we're going to be able to have more processes go through in workloads, which is going to allow for more efficiency, okay? So here's gaming, okay? So let's look at gaming specifically. Gaming partners and ecosystems are responding to a sudden slowdown in consumer demand and correcting channel inventory. Now, Nvidia implemented programs with channel partners to adjust pricing and to price position current high-end desktop GPUs ahead of new architecture launch. Estimated GeForce GPU sell-through is up over 70% since before the pandemic. So there's still growth in the gaming revenue specifically, all right? RTX now supported almost 300 games and applications, okay? So the GeForce Now application, the GeForce Now platform has been growing substantially. 15 of the top 15 most popular GPUs on the Steam platform are NVIDIA GeForce GPUs. GeForce Now registered members now exceed 20 million, over 1,350 games total. So NVIDIA is the king in terms of GPUs, and in terms of gaming, gamers want to use these NVIDIA GPUs. Now let's look at what the revenue has done quarter over quarter, year over year. So, you know, when we had the pandemic, everybody was inside. Everybody wanted to game. Everybody wanted to game. And so what was happening was the revenue was increasing, right? A lot of the growth was pulled forward due to the pandemic, but we had a steep drop off, right? Because NVIDIA was over ordering. I believe that NVIDIA was over ordering their graphics processing units because of the supply chain disruptions, and they wanted to make sure that they had enough on hand. But the sudden slowdown and the sudden drop in demand, that hurt their sales substantially. So now what they're doing is they are correcting their channel inventory. They're getting ready for the new gaming architecture launch that they're going to be having over the next couple of months. That's going to help them back in terms of this bull market gaming cycle. Now, professional visualization. This is pretty much another segment of the business, right? Sequential increase in mobile revenue was more than offset by lower desktop revenue, particularly at the high end. Enterprise demand slowed as macroeconomic headwinds intensified, and OEMs work to increase inventory. Expect trends to persist in Q3. Okay, so OEM stands for original equipment manufacturer. So the way this works is that companies typically have licensing to certain products, right? And so in computers, and PCs, in gaming devices, Nvidia already probably has pre-installed GPUs into these devices. And so pretty much that's how that's how they're able to generate the recurring revenue over and over and over again. And so when we look at the professional visualization metric, it was up, it was up, it was down, but now we can see that now that it's down 4% year over year, and it's down 20% quarter over quarter. So while ProViz is undergoing a near-term adjustment after doubling last year, AI and omniverse workloads have expanded the market opportunity over the last couple of years. So, Nvidia is just working through a correction right now. They have a correction in the business that they're just working through. Okay, let's look at automotive. Now, automotive is up 45% year over year and 59% quarter over quarter, which is very good. Okay, Q2 is an inflection point for automotive revenue as Nvidia Orin has great momentum. Strong growth driven by auto AI solutions, AI cockpit, and self-driving revenue. Strength in self-driving driven by new energy vehicle design wins ramping into volume. They announced rollout plans all built on NVIDIA Drive. New vehicles from NIO, Li Auto, Jidu, and Human Horizons. Pony AI's line of self-driving trucks and robo-taxis. So what this is telling us is that NVIDIA is creating the technology for autonomous driving. They are going to be major players in autonomous driving. Let me tell you about who they are working with. They are working with Tesla. Okay, Tesla is using NVIDIA GPUs to help with their autopilot training. I'm going to say that again. Tesla, the largest EV company in the world, the best autonomous driving company in the world, is using NVIDIA's GPUs to power the autopilot training. Okay, so now NVIDIA is working with Tesla, and they're also working with other auto manufacturers. So this is great. And this is going to be a big leg of growth that's going to help foster the company and help give the company more revenue year over year. Now let's look at the sources and the uses of cash. Now there was a sequential decrease, reflects lower revenue and higher cash tax payments, partially offset by reduced advance payments on supply payments. Now NVIDIA returned $3.44 billion to shareholders in the form of share repurchases and cash dividends, which is very good. That's what we want to see. They invested $447 million in CapEx. CapEx stands for capital expenditure, so investing into the business. That includes principal payments on PP&E, and they ended the quarter with $17 billion in gross cash, $11 billion in debt, with $6 billion in net cash. That's good. We want to invest in businesses that have good cash positions, right? NVIDIA has a good cash position, and they have more cash and they have long-term debt. So if something happened in the company, they have the ability to pay down that debt and be able to still have extra cash to be able to continue to invest in the business. So the cash flow depleted a lot. Okay, we know that the cash flow depleted a lot, but there is a reason for that happening. Okay, so let me, and we're going to go over that down the line. So let's look at the next year. So let's look at the next quarter's outlook. Okay, Q3 fiscal 2023 outlook. So the revenue is expected to be 5.9 billion, expecting gaming and ProViz revenue to decline quarter over quarter, partially offset by quarter over quarter growth in data center and automotive. Gross margins are expected to be 62.4% GAAP and 65% non-GAAP. So this is good. Gross margins is picking back up and revenue is picking back up again. Now the gross margins, which is very, very important, they're calling out 62.4%. which is great because last quarter it was around 45% in terms of gross margin. So So pretty much the company is expecting gross margins to pick back up. Operating expense, approximately 2.59 billion GAAP and 1.82 billion non-GAAP. Okay. Other income and expense, net expense of approximately 10 million for GAAP and non-GAAP. And their tax rate is 9.5%, which is really one of the most favorable tax rates I've seen in the industry. Now, capital expenditures is approximately 550 million to 600 million, right? So that's what was going on in the outlook. Now, what are some key announcements that have been going on with the business? Now, top global system makers accelerate adoption of Nvidia Grace and Grace Hopper. Atos, Dell Technologies, Gigabyte, HPE, Inspur, Lenovo, and Supermicro are adopting Nvidia Grace CPU superchip and Grace Hopper superchip to build the next gen of servers, turbocharging AI and high-performance computing workloads for the exascale era. The leading supercomputing net centers in the US and Europe will be among the first with systems featuring the super chips. Los Alamos National Laboratory announced that Venado, its next gen system, will be the first system in the US to be powered by NVIDIA Grace CPU technology. OPS, the Swiss National Computing Center's new system, will grace the Grace CPU superchip to enable breakthrough research into a wide range of fields. Now, this is very good because, like I said before, the company is working on new chip architectures, working on new architecture to roll out, because these are going to be very good in terms of the growth for the business. Now, NVIDIA gains ground in the latest top 500 list of supercomputers. 357 of the top 500 supercomputers, or 71%, are powered by NVIDIA, including 31 of 39 new systems. This is very, very good. 23 of the top 30 on the Green 500 list of most energy efficient supercomputers are powered by, guess who? NVIDIA. NVIDIA Selene supercomputer ranks number 8 in the top 500 and is the world's fastest enterprise supercomputer. So look at the technology that NVIDIA has. They are the cream of the crop. They are the best of the best when we're talking about GPUs. Now, NVIDIA and Siemens to enable industrial metaverse. As a first step in this collaboration, NVIDIA plans to connect the Siemens Accelerator open digital business platform with the NVIDIA Omniverse platform for 3D design and collaboration. Enables an industrial metaverse with physics-based digital models from Siemens and real-time AI from NVIDIA, in which companies make decisions faster and with increased confidence. Now, companies are going to be able to employ digital twins with real-time performance data, create innovative industrial IoT solutions. IoT stands for Internet of Things. This is very, very good in terms of the growth of the business, all right? In terms of the growth of artificial intelligence. Leverage actionable insights from analytics and at the edge / in the cloud, and tackle the engineering challenges of tomorrow by making visually rich, immersive simulations more accessible. Now, NVIDIA created the Omniverse platform, which is pretty much their version of the metaverse. Now, people have been down on the metaverse this year, specifically because of the fact that we've been in a bear market, and people are saying the metaverse is not going to be anything. But the metaverse, people think that the metaverse is only going to be we are immersed in a virtual world. But the metaverse, in terms of what NVIDIA is talking about, they're going to be using enterprise software, and they're going to marry the physical world with the virtual world, the virtual world. So AR versus VR. And that's what NVIDIA has been working on. The CEO of NVIDIA, Jensen Huang, who was the founder of this company, speaks very, very highly of this, and he believes that the metaverse will save companies billions of dollars. And so this is very, very important for us to understand what NVIDIA is doing in the metaverse. Now, reinforcing NVIDIA's leadership in the latest MLPerf training benchmark. What is MLPerf? the industry's first objective AI benchmark for measuring machine learning performance. Remember what I said about machine learning earlier? Consortium of over 70 universities and companies, including Google, Intel, Baidu, and Nvidia, founded in 2018. Nvidia has consistently delivered leading results and record performances in both MLPerf training and inference benchmarks. Now, MLPerf June 2022 AI training, AI 100 GPU continues to secure the highest number of wins. NVIDIA AI remains the only platform to run all 8 tests. On the per chip test, A100 was the fastest on 6 of the 8 benchmarks. NVIDIA H100, available in Q3 of this year, will deliver another giant leap of performance. So understand that. NVIDIA and partners accounted for 90% of all submissions, reflecting the scale and reach of our ecosystem. NVIDIA AI delivers the highest productivity per dollar. Over the last 3.5 years, the NVIDIA AI platform has delivered 23 times more performance, the result of full stack innovations, GPU, software, and at-scale improvements. Now, the company is so immersed in AI that NVIDIA has their own AI podcast where they speak about the advances in artificial intelligence. And so I recommend, if you are interested in what AI is and what it can do in the future, please check out their podcast because they're giving you some really good information. Think about what they're doing in that AI. Now, NVIDIA announces hybrid quantum classical computing platform, more platform computing, high performance computing. The NVIDIA QODA is an open unified programming model that spans today's most powerful classical computers and quantum processors. NVIDIA QODA unified programming platform, adopted by communities, global leaders to enable quantum accelerated AI, high performance computing, health, and finance applications. So now we are broadening our horizon, and we are immersing ourselves into multiple industries. High performance computing and AI domain experts can use NVIDIA QODA in public clouds, NVIDIA DGX systems, and a large install base of NVIDIA GPUs in scientific supercomputing centers, right? Look at the collaborations that they have. They have multiple collaborations in hardware, software, and supercomputing. So they are rolling out more things and more growth in terms of AI, right? NVIDIA Omniverse, here we go with the metaverse platform they created again. NVIDIA Omniverse Avatar Cloud Engine for virtual assistants and digital humans. NVIDIA Omniverse Avatar Cloud Engine is a suite of cloud-native AI models and services enabling businesses to create and deploy assistants and avatars. That's where we go into what Jensen Huang was saying before. This is going to save the company money. These assistants and avatars understand multiple languages, respond to speech prompts, interact with the environment, and make intelligent recommendations. The intelligent recommendations, that's what we're talking about in the machine learning aspect, the computer being able to learn on the fly, being able to intake information and be able to process new information based on the information that is constantly processing. Okay, these can transform interactions in gaming, entertainment, banking, transportation, and hospitality. We have more industries: entertainment, hospitality. Okay, understand. Now, NVIDIA and partners build out universal scene description to accelerate industrial metaverse and the next wave of AI. Announced a broad initiative to evolve universal scene description, the open source and extensible language of 3D worlds, to become a foundation of the open metaverse and 3D internet. Working together with USD's inventor Pixar, as well as Adobe, Autodesk, Siemens, and a host of other leading companies, NVIDIA will pursue a multi-year roadmap to expand USD's capabilities beyond visual effects, such as adding support for international characters, geospatial coordinates, real-time streaming of Internet of Things data. enables USD to better support industrial metaverse applications in architecture, engineering, manufacturing, scientific computing, robotics, and industrial digital twins. This is new technology that is going to be cutting edge for the world. All right. Major release of Omniverse with new USB connectors and neural graphics SDKs. Unveiled 11 new Omniverse connectors, including for PTC Creo, visual components, and side effects Houdini, bringing the total number of connectors to the Omniverse USD ecosystem to 112. So the company's been working on this for a while. Look at the progression. They're bringing on 11 new connectors. Now they've got 112. They're going to be bringing on more in the future. Development is ongoing for Blender, Autodesk Alias, and Autodesk Civil 3D, Siemens JT, SimScale, Open Geospatial Consortium, and Unity, which will further unlock metaverse workflows for manufacturing, engineering, and design companies. That's the thing. The metaverse is not just us going into a virtual world. The metaverse is about connecting the virtual to the physical. That's what it's about. The neural graphics is a new field intertwining AI and graphics to help automate design choices and provide new, yet to be imagined opportunities for artists and creators. Neural graphics will define how virtual worlds are created, simulated, and experienced by others. Examples include Omniverse audio to face, create facial animations from an audio file, audio to gesture, generate realistic arm/body motion from an audio file. Like, understand that. We're talking about generating facial animations from an audio file. We're talking about generating realistic arm body motion from an audio file. This is major technology. I don't think that we really understood like the level of technology, and that was just some key announcements that happened in this quarter. And so we really got to understand Nvidia is an artificial intelligence company. Nvidia is a data center company. Nvidia is a gaming company, and they create the best GPUs in the world. They create the best GPUs in the world, y'all. Remember that. Now, let's look at Nvidia overview. Now, Nvidia is a computing platform company. So Nvidia pioneered accelerated computing to help solve the most challenging computational problems. The approach is broadly recognized as the way to advanced computing as Moore's law ends and AI liftoffs. Nvidia's platform is installed in several hundred million computers, is available in every cloud and from every server maker, powers 357 of the top 500 supercomputers, and boast over 3 million developers. So, you know, we see what Nvidia can do from a computational standpoint, right? The headquarters is in Santa Clara, California, got about 25,000 employees. Now, if we look at Nvidia as a glance, the company was founded by Jensen Huang, who is the current CEO, Chris Malachowski, and Curtis Priam. Now, when we're looking at companies, we want to invest in companies, or we want to look at companies where the founder is running the business. Okay, when founders are running the business, that's like their baby, right? They've been there from the beginning since 1993. We're talking about almost 30 years ago, this company was founded, and the CEO is still at the helm of the business. Okay, in 1999, there was an IPO on the NASDAQ at $12. Prior to 5 stock splits, now 48-1. 2001 Xbox win, the fastest semiconductor company to reach $1 billion in sales. 2006 unveils CUDA architecture expanding to scientific computing. 2016 introduces the first products for AI and autonomous driving. And in 2020, they acquired Mellanox for $7 billion, launches DPU as new processor class. And if you look at the recognition, it's really truly seen as one of the best businesses in the world. So if you look at the revenue by market platform, okay, the revenue for fiscal year 18, the company had $9.7 billion in fiscal year 2018. Fiscal year 22, we're looking at $26.9 billion, and the year isn't even over yet. So if we're looking at the breakdown from what the company is doing, the company has gaming has always been one of their top, really has been the top for the company. But now we're looking at data center. Now we're looking at pro visualization and the auto, right? The pro visualization, that's what we're talking about with the metaverse, all the metaverse applications, and the auto, that's what we're talking about from the autonomous driving applications, and then the OEM and others. The OEM, that's our original equipment manufacturing segment, all right? So tremendous market forces driving Nvidia growth, okay? Nvidia has gaming on their side, artificial intelligence, data center, autonomous vehicles, and robotics, and the omniverse. Now I'm telling you, all of these right here, I believe, are in their infancy stages from what they will be in the future, okay? These 5 segments are going to allow us to experience heavy growth. There's going to be heavy growth in these next 5, over the next 5 years, over the next 10 years. Now, the core businesses, gaming was 46% of the fiscal 2022 revenue. Now, the fiscal 2020 revenue was $12.5 billion. A 5-year CAGR of 25%. That's CAGR. What does CAGR stand for? CAGR stands for compounded annual growth rate. Okay, the company has a 5-year compounded annual growth rate of 25% in gaming. They've got strong market position and technology leadership, compounded long-term unit and ASP growth, and they've got 200 million gamers on the GeForce Now platform. They've got a strong gaming ecosystem with what they've got going on in gaming. Data center, 40% of the revenue, $10.6 billion, a 5-year compounded annual growth rate of 66%. They are a leader in deep learning and AI. We're talking about used by all major cloud computing providers in thousands of enterprises, and they are a leader in supercomputing, 357 of the top 500. Professional visualization. This is what I was talking about earlier with that industrial metaverse, the industrial metaverse. The revenue was $2.1 billion, 5-year CAGR of 20%. They've got 90% market share for graphics, for workstations, diversified end markets, media and entertainment, architecture, engineering and construction, public sector, strong software ecosystem. They will be a leader. You can book it. They're going to be a leader in the industrial metaverse. Automotive was only 2% of the revenue. They've got $566 million in revenue from this segment, 5-year compounded annual growth rate of 3%. Now, the CAGR here is low, but we are in the infancy stages of this. Like, they just rolled out their autonomous driving technology in 2016. And so it's going to take a long time for us to be able to develop this and see what the company can do. Now, the historical revenue was driven largely by infotainment. That's the entertainment system inside of the vehicle, and the future growth largely driven by autonomous vehicles, where Nvidia offers a full hardware and software stack, over $11 billion design win pipeline. Now that's important. They've got the hardware and the software. So they're creating their chips, and they're also going to have the software. And if I had to guess, the software is going to be artificial intelligence, and that software is going to provide that machine learning, that neural network, the ability for the computer to learn things on the go. Because when you are in the built environment and the car is driving itself, is going to have to take in a whole lot of data as it's driving on the roads. And so what's going to happen is the machine learning, the computer is going to be able to learn more things as it processes more data. That's very important. Okay, growth, probability, and mixed metrics. Okay, the company is continuing to grow. We're talking about gross margin was at 60% in fiscal year 18, 67% in fiscal year 2022. That's very, very good. Revenue was 37%. Now we're talking about revenue was about 6 billion, 8 billion, 24, 26 billion when we're looking at fiscal year 22. So that's very, very good. Profitability has continued to be pretty good. The first half of fiscal year 2022, they had 66%. First half in 2022, we're down to 58%, but there's been some things going on in the business that we're going to talk about before. Now, if we look at the business mix, we look at where the business is now, we're looking at last year, first half fiscal year 2022, the company was at 48% gaming, 36% data center, 7% pro viz, 3% auto, 6% OEM. Now we're talking about 38% gaming, 51% data center, 7% pro viz, 2% auto, 2% OEM. So this is the business mix. So we see that the gaming is a lower segment right now, and we've got a higher segment from the data centers. So that's something we need to keep in mind. Now, why is accelerated computing important? Now, why is it important? It's advancing computing in the post-Moore's Law era. Now, the world's demand for computing power continues to grow exponentially, yet CPUs are no longer keeping up as Moore's Law has ended. Nvidia's pioneered GPU accelerated computing to solve this problem. Optimizing across the entire stack from silicon to software allows Nvidia to advance computing in the post-Moore's Law era for large and important markets: gaming, pro-viz, high-performance computing, AI, cloud, transportation, healthcare, robotics, and the Internet of Things. We see so many different industries going on with this company. And so the CPU, that's the central processing unit of the computer. The GPU is the graphics processing unit of the computer. So NVIDIA is saying, look, in this post-Moore's Law era, they're still going to be expecting more growth for computing power. But since they have that GPU is going to help you get to that next growth. So we see world leader in accelerated computing, gaming, data center, professional visualization, and automotive, the four segments of the business. Let's look at data center very quickly: high performance computing and AI. If we look at the data center revenue, it's increasing 5-year compounded annual growth rate. Registered NVIDIA developers increasing. The top 500 supercomputers increasing. Let's look at every major cloud provider. AWS, the largest, Azure, Google Cloud, Baidu, Alibaba, IBM, Oracle, Tencent. So we're talking about world-renowned cloud providers. NVIDIA works for every single one of them. We want to be connected to businesses that work with everybody. The GPU that NVIDIA designs can work in every single data center in the world. And so that's what's so powerful about this business. There's nobody on NVIDIA's level in terms of GPUs. Like, there's nobody. I don't care what you say. There's nobody on their level in terms of GPUs. And they are working with every major cloud provider right now, and they're going to continue to work for every single major cloud provider. This is very, very important. Gaming, GeForce, the world's largest gaming platform. This is the largest gaming platform. And if you don't know this, NVIDIA powers the Nintendo Switch console. Okay, they're number one in PC gaming with 80% market share. 15 of the top 15 most popular GPUs, they are running the space in terms of gaming. Professional visualization, they're accelerating rendering, AR, VR, the autonomous reality versus the autonomous reality versus the virtual reality. Augmented reality, augmented reality versus virtual reality, data science simulation and science viz, virtual workstations, the industrial metaverse, connecting the physical to the digital. That's what the industrial metaverse is going to be, connecting the digital to the physical. Now, the automotive. Look at what the automotive has been doing. Look at this strong partnership ecosystem that they're building over here on the right. They're working with Mercedes-Benz. They're working with Jaguar, Land Rover, NIO, Xpeng, all these different businesses, Volvo, right? All of these companies are working in the autonomous vehicle network. Guess who else they're working with? They're working with Tesla. Tesla is using the Nvidia GPUs for the autopilot training for their autonomous vehicles. We want to invest in businesses that are working with everybody. Nvidia is working with everybody in the autonomous vehicle network. That tells you how strong they are as a company, how strong they are as a business. They have a large and diverse customer base, reaching hundreds of millions of end users through hundreds of customers, 45 million designers and creatives, 20 million enterprise users, 200 million PC gamers. Like, this is major. And let's look here at the bottom. No customer is larger than 10% of total revenue for the last 2 fiscal years. That's a game changer. Look at that. Now, no customer is larger than 10% of total revenue for the last 2 fiscal years. That means that the business is insulated. It's insulated. It works with everybody. So if one customer decides they don't want to work with Nvidia, that's okay. That's not going to deal that big of a blow to the business. Okay, so I've went through all of that. I've looked at all the situation. Next, let's go to the balance sheet. Let's look at the balance sheet, okay? Because I want to look at the balance sheet before we go on to the chart and look at some other things. Now, if we look at the balance sheet for the company, we want to make sure the company has a strong balance sheet. Now, the balance sheet for Nvidia, the company has about $27.4 billion in total current assets. Total current liabilities, $7.5 billion in total current liability. This is great. The company almost has 4 times the amount of total current assets to total current liabilities. Okay, that's the first thing we want to look at when we're investing into a business. We need the total current assets to be higher than the total current liabilities. If we can't meet that, we need to go ahead and throw it away and go to the next business. Now, the cash. The company has $3 billion in cash, $14 billion in marketable securities. So the company has about $17 billion in cash and about $9.7 billion in long-term debt. So the cash that they have has outweighed the debt that they have, which is very, very good. Now, let's go down here to the consolidated statements of cash flows. And so right here, what we're looking at is on the left column. On the left column, we're looking at what the company reported in the previous quarter. The column to the right is the numbers that were reported the 1 year prior to this. So the company had about $3 billion in operating cash flow when they reported earnings this past quarter. But the year before, the company had about $4.5 billion in total cash flow. So if we look at that, we'll say, man, that's a big decrease in terms of what we're talking about in terms of operating cash flow. But the company went through some things that they had to go through. Now, the company was heavily affected due to a $1.22 billion in charges for inventory and related reserves based on revised expectations for future demand, and $122 million for warranty reserves. These charges in the quarter reflect purchase commitments that we made during a time of severe component shortages and our current expectations of ongoing macro certainty. So what happened was Nvidia overordered. They overordered, and so they had to pay for that, right? The company also incurred a $1.35 billion acquisition termination charge in relation to the ARM transaction. Now, Nvidia was trying to acquire a company called ARM. Now, ARM is a company that pretty much designs chips for pretty much every single major chip company you can think of. Apple, AMD, Qualcomm, Nvidia, everybody. And Nvidia was trying to acquire ARM. And so what happened was that Nvidia went through some antitrust problems and some antitrust regulations. And so what happened was a lot of the regulators across the world said that if Nvidia was able to acquire ARM, that would hurt the competition in the business in general. And so when we look at that, when we look at this balance sheet, yes, it was a large decrease in cash flow, a large decrease in cash on the balance sheet. But the thing is, though, is that there's reasons for that. Okay, there's reasons for that. There are reasons why the company has been going through shortfalls. And that's why listening to the earnings calls is so important, because the information I just gave you, I got that information from listening to the earnings calls. So please keep that in mind when we're looking at the consolidated cash flows and the balance sheets for Nvidia and other businesses. Now we've talked a lot about the company. We've talked about what the company has been doing from an investing standpoint. We talked about the balance sheet and all of that. Okay, is Nvidia still a good business to even invest in? Is Nvidia still a good business to invest in? So we want to invest in businesses that have increasing revenue and increasing profit year over year. So let's look at the profit, because the profit is the most important. So the earnings, right? So fiscal year 2022, Nvidia reported $4.44 in annual EPS earnings, right? In 2023, they are estimating to only have $3.39. So Nvidia is talking about having a loss of $1.05 per share in terms of earnings. So that's not good. That is not good at all. But this is the thing. This is what I want you to put into perspective. Nvidia has had a strong growth rate over the last 10, 15, 20 years. And so what I think is happening is, I think that Nvidia, they're just going through a drought. I feel like if we compare Nvidia to a major college football team that's a powerhouse, if we compare them to a major NFL franchise or a major NBA franchise that goes to the playoffs year after year after year, I just believe that in 2023, AMD is going to miss the playoffs, right? AMD is going to miss the playoffs, but I guarantee you they're going to be back into the playoffs the next year, the year after that, the year after that. So in 2024, they're expected to pick back up to $4.51, which is more than 2023 and 2022. 2025, $5.68. 2026, a big jump to $7.45 per share. So the earnings are continuing to increase. And so since I see that, that makes me feel very, very good about the business. Okay. And so Nvidia has taken a beating, has taken a large beating in the stock market over the last few months. And so now it's time for us to go to the chart, because I believe that these annual earnings for the company is going to increase. But now it's time for us to go to the chart and let's see what Nvidia is doing from a price perspective. What are they doing from a price perspective? So let me share my screen really quickly here. Because it's really, truly time for us to go to the chart. So this right here is a chart of Nvidia. Okay. This is a chart of Nvidia. And so if we look at the long-term growth rate of the company over the last 3 years, the company was at $42.33 over 3 years ago. And the company got as high as $346.47. But now the company has drastically came down, and now we're at $137.14. And so the company went through a lot of bad periods. Okay. A lot of bad stuff was going on through the company. And so before we go through the chart and do this analysis, let me go through one thing really quickly here. I'm sorry about this. I forgot about what I want to talk about. I wanted to talk about Nvidia's close call. Okay, I want to talk about Nvidia's close call. and why this is so important for the business. So, new China rules could have stymied launch of major data center chip right when Nvidia is facing other growth challenges. Now, let's go through this Wall Street Journal article because this is going to talk about some things that is going on with the company and why the company has dropped so substantially. Now, being on top isn't always what it's cracked up to be. Nvidia pioneered the use of graphics processors once used mainly for video gaming into powerful chips that now enable artificial intelligence capabilities in data centers. It remade its own business in the process. Annual revenue has grown more than fivefold since before the data center business began to take off in 2016. Nvidia also became the most valuable semiconductor company in the world with a market capitalization higher than at least 5 other chip companies that generate more in annual revenue. But for the past month, it has wreaked havoc on that position. The company's pre-announced results for its fiscal second quarter on August 8th and its subsequent report for the period 2 weeks later both showed the chip maker's business being hit hard by growing inventory and slipping demand, particularly in its key video game segment. And Nvidia's warning last week that it might not be able to sell some of its data center chips in China made the situation even worse. So if we look at how semiconductors have performed in the gray and how Nvidia has performed in the blue, Nvidia has been performing very poorly in relation to the semiconductor index. Now, the stock has slid 28% since the August 8th pre-announcement, and its loss of 54% for the year to date is the worst on the semiconductor index. Nvidia's market capitalization is now second on the index, running about 20% below that of Taiwan semiconductor manufacturing. Now, that creates an interesting setup for Nvidia ahead of what is expected to be a major product launch this fall. A new graphics chip or CPU called Hopper is coming along with a central processing unit or CPU called Grace. Both are targeted for the data center market, and Grace will be Nvidia's first CPU entry into that space. They've been doing GPUs. The later has its work cut out for it, as it will be challenging established positions by Intel and Advanced Micro Devices in that segment. But the former Hopper is expected to be a major component of Nvidia's data center sales later this year. CEO Jensen Huang said on the company's second quarter call on August 24th that we expect to ship substantial Hoppers in Q4. Wall Street expects a little over $4 billion in data center sales in that fiscal period that ends in January. But its launch had a close call. In a filing after the U.S. markets closed on August 31st, Nvidia said Hopper, which is called H100 in the document, is one of 2 data center chips that now require a license from the U.S. government for any future exports to China and Russia. Nvidia also said the new rules may impact the company's ability to complete its development of H100 in a timely manner. A filing early the next morning said that Nvidia got the necessary approvals from the government to continue the development of the chip, but it didn't change the warning about the sales restrictions to China. Okay, investors weren't soothed. Nvidia's stock price opened Thursday with a loss of 6%, even after the second filing had dropped a full 10% by Friday. Nvidia has warned that the sales restrictions could cause about a $400 million hit to revenue in the current third fiscal quarter, which is about 7% of its total forecasted for the period. Now, Cohen analyst Matthew Ramsey had written a note before Nvidia's second filing that if development on the Hopper chip was delayed, the knock-on effects would likely be much larger than the $400 million Nvidia specified for the current quarter. Data centers are still expected to be a major growth driver for Nvidia. U.S. tech giants such as Amazon.com, Microsoft, and Google are major buyers of the company's chips to power their cloud computing services, And Mr. Wong says such customers are dying to get their hands on the Hopper chip. But even the cash-rich cloud giants are feeling the pinch of the global economic slowdown and are showing early signs of moderating their spending. So Nvidia's data center business is projected to average 29% year-over-year revenue growth over the next 3 fiscal years, compared with an average of 62% over the last 3, according to FactSet. Dodging a bullet with this newest chip won't keep Nvidia from getting wounded by a recession. Now, if we take all of this into context, right, the United States government is playing chess with other major players in the world, China and Russia, okay? These chips that Nvidia are producing could China and Russia could use these chips to help power their artificial intelligence situations, and it could be a national security risk to the United States government. Now, Nvidia is forecasting a $400 million hit to revenue, but I believe that's an overestimation for the revenue hit, right? I think that companies really want to give you more so they can come in under. They don't want to give you, they don't want to tell you it's only going to be a $100 million hit, and then it ends up being a $200 million hit, because now investors are going to hit you even harder. When the company announced this, the stock was down as much as 11% the same day that they announced this. And so what happened was this $400 million hit was being priced into the stock at that time. And so also keep this in mind at the bottom too. Nvidia's data center business is projected to average 29% year-over-year revenue growth over the next 3 fiscal years, compared with an average of 62% over the last 3. The last 3 years, we went through a global pandemic where everything was online. Everything was online. So the technological revolution, all of that growth was just pushed forward because of the pandemic. 29% year-over-year revenue growth is still solid. And that's what I want people to understand. Yes, Nvidia had 62% growth over the last 3 years, but 29% is still nothing to sneeze at. And that's still great growth, because what's going to happen now? What's going to happen now is that we're just going to get back into normal growth, Okay, we're going to be getting back into normal growth, back to where we're supposed to be going. Okay. Now, sorry about that delay. Let's get back to the chart. Now. So there's a couple of things I want to point out on this chart. And if we look at this chart, like I said, over the last 3 years, the stock has been up to the right. Okay. Let's look at what the company has been doing over the last 10 years to really truly give us a perspective of what this company has been doing over the last 10 years. Okay. Look at what this company has been doing over the last 10 years, y'all. This is a monthly, each one of these candlesticks are monthly charts. These are monthly candlesticks. So each one of these candles represent a month. The company has been going up and to the right. Okay. These are businesses that we want to invest in. We want to invest in the companies that are going to be going up and to the right. Now, let's break down a little bit of the valuation that I have on the chart. So I do have a valuation metric on this chart that I want to talk about. And a lot of times we always ask ourselves questions about how good of a business is and what's going on with the business. What we have to ask ourselves is, what is the business worth? Okay, what is the business worth? What is the company's worth? Now, I ran a base case valuation for the company about a couple of weeks ago when they had released a report, and the base case valuation was about $150. It's about $150 before the report came out. But recently, Nvidia had a new analyst research report that came out and said the base case valuation was about $129.98. So pretty much almost $130 from a base case valuation standpoint. And so what I always like to say, we always want to get companies that are undervalued, that are underneath their base case valuation. But I'm going to be completely honest with you. I think the sell-off that has happened with Nvidia has been overdone. Okay, I believe it's been overdone. Okay, I believe the selling has been overdone because I really truly believe in management. I believe in CEO Jensen Huang. Look, I understand that Nvidia is going to be dealing with problems in terms of their chips, but I believe that they're going to be able to reset this and get everything on the right side. So let's draw a trend line from the 52-week high down to where we are right now. The stock closed around $137 today. The stock is down 60%. Okay, the stock is down 60% right now from its 52-week high. And so right now at 137, technically it's above the base case valuation right now. But this is what I want to tell you. I think that right now is a great time for you to be buying this stock. Why is that? Because the stock came down to $133. I think it was a little bit lower than that. The stock came down to $132.70, right? That's where the stock came down. And stock is a little bit higher from that. But the level where the stock is right now is right in line with previous support from over a year ago, right? It's right in line with previous support from a year ago. Let's look at the chart even more. Let's look at the chart even more. Okay. Look at this area. Look at this area between July of 2020 and about August of 2021. The stock was going through a lot of consolidation, okay? A lot of consolidation. And so if we look at it, what's happening with Nvidia right now, Nvidia is back in the area of accumulation. Okay, what is accumulation? Accumulation is when a stock is just trading in a channel. It's just trading in a channel for a period of time. That's an opportunity for more investors to add more shares to the business. Look at where we are. It's at 137.14 right now. If we look at where the business was in May of 2021, it was around 134, 135, right? I believe if you believe in Nvidia over the long term, which I believe in Nvidia over the long term, this is the time where you want to start adding shares to you want to start adding shares to your portfolio right now. That's just my opinion. I believe that right now is the time for you to be adding shares to your portfolio of Nvidia. Okay. Now, keep this in mind. Understand what the Fed has going on. Understand that the Fed is going to be raising interest rates. So eventually we'll probably get here. We'll probably get to about 120, 129.98. We'll probably get to this key fib level of 116.28, and we'll be at a 10% discount from the new valuation that they gave a couple of days ago. But understand this. I don't want you to think about just timing the market. Think about just timing the market. Think about the time in. Time in the market is better than timing the market. So I think that it's okay to start buying a business that is down 60% from its 52-week high. It's down 60%, and you're buying it at a support level. You're not buying it in no man's land. You're not buying the stock in no man's land. You're buying it at support levels. And pretty much you can start your position here. And we know that we're going to be dealing with volatility over the next couple of months. And you can just add to your position and just average down. And that will allow you to continue to build that position over the next couple of months. So like I said, we look at the chart, we understand what Nvidia has been doing over the last 3 years. I remember when I came into the market a couple of years ago, I remember like 2020, I was buying companies, but I didn't know what I was doing at the time. I didn't know what I was doing. And there were so many great businesses on sale. But at the time, I didn't even know what I was doing. And then the stock market just went on a run. 2021, we had one of the best years ever. But guess what happened? In 2021, when we were having the best years ever, do you know what people were saying? People were saying that, man, I wish that stock prices would come down. I wish I had an opportunity to get into businesses on sale. Well, guess what? Now the business is down 60%, but guess what? Nobody wants to touch it. Nobody wants to touch it. Everybody is talking about, oh, we're in a bear market and the Fed is raising interest rates and blah, 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 blah. And trust me, I understand all of that. I'm not dismissing any of it. We've talked about that ad nauseum over the last 5-6 months about what the Fed has been doing. But eventually you're going to have to say, when is it time to buy? When is it going to be time for you to add to your position? And this is the time. Like Nvidia is not going to be 60% below its 52-week high for long. It's not going to stay forever. 3 years from now, I promise you this stock is not going to be at 137. I promise you. Like, I'm willing to bet you money that it won't be at 137. Nvidia is going to continue to grow. Remember all the metrics that we talked about with the business. Remember everything that's going on. And on top of that, I ain't even mentioned that. Look at the RSI. Look at what the RSI has been doing with this business over the last few years. The RSI is below 30. You want to buy this stock when the RSI is below 30. It hasn't gone below 30 but 2 times. It's below 30 right now. So I'm telling you, even though the base case is 129.98, I think it's a good time for you to start buying this stock now. You can build into your position as the stock price goes down. You can average down 116.28. That's a key fib level. You know, that's a very key fib level. We'll see what it does. We'll see if it can hold right there. But I'm telling you, Nvidia is a strong company. Nvidia is a strong company with great management and with a long-term good prospect. So what I really, truly want you to do is just look at what's going on. Look at the base case valuation I've got. Look at the 10% margin of safety that I've got. Look at that key Fibonacci level that I have, and you make your decision. But understand this. This is a game of us accumulating shares. We're accumulating shares over time. Right now, at a support level, this is a great time for you to be adding Nvidia to your portfolio and buying shares of this business. And so, you know, I appreciate again for you all tapping into another episode of the Trade for Yourself podcast. Again, please like this. Please like the video. Please subscribe. Please hit that notification bell. Please let me know what you think about Nvidia as a company, because I believe that Nvidia is a very, very strong company. It's going through some growing pains. Like I said before, Nvidia is going to miss the playoffs this year. It's going to miss the playoffs, and that's okay. But Nvidia is a perennial powerhouse. It's going to make the playoffs next year and the year after that and the year after that. So please think about everything that I talked about in this episode. Look, this was a long episode. There was a lot of information that was talked about in this episode. I really, truly want you to process what was going on in this episode, okay? Remember, subscribe to the podcast. Make sure you hit that notification bell so you can be in the know every time I drop an episode. And remember, don't pay for it. Trade for it. I'm going to tap in, y'all.